Alright, folks, welcome to this week's Forex commentary and market review. Um, this is going to be the final commentary for this year 2025, and um, it's been a long journey. In fact, I've been struggling to record this one for some reasons. I don't know if it's because it's going to be the last video I upload this year on YouTube. Hopefully not, because during the week I was talking about holding a recap of this year's price action, and I asked for the public's opinion about how we're going to do it, and I'm thankful a lot of people talked about how they felt would be ideal and efficient for us to run the 2025 recap. But the recap isn't commentary, isn't talking about possible setups, it's not talking about um, you know the weekly draw on liquidity and stuff like that. It's just going to help us revisit price action, and you know take out key talking points and lessons off of the delivery throughout this year. And I kind of like thought about the way I wanted to go about this recap, the concept, the pairs, which apart from going through dollar-based pairs, I'm going to talk about key price action details during the year. Like, I recall there was a time, I said I was going to do a special commentary, if you remember, and I talked about S&P 500, Nasdaq. Um, I think that was when I talked about silver. I talked about gold and crude oil as well. So I may end up doing the general commentary or 2025 recap in parts, because I may not be able to cover the entirety of price action. And of course, it's going to be in a live stream. Yeah, I'm not going to sit down to record. I want it to be a live stream, so I want everyone, or as many people as possible, to be present in the live stream. So if you want to ask questions in the live stream, you can ask. So it's not going to be I'm not going to sit down to record and talk about it. Yeah. So I've been trying to put thoughts together and about recording this one, as well as announcing the recap. And yeah, one final note is I'm going to schedule the live stream during the week, and you might see me pop up on your notification feeds, but that would be me test running the live stream, because I've not had any experience with live streams. So if I'm trying to run any live stream, YouTube might notify you that okay, Settle Black is online with a live stream and stuff like that. If you want to join, you can join, because if you join, I'll just say I'm test running it. Okay. And after that, I'm gonna schedule a fixed time on the weekend. I'm thinking prior to Christmas, because this week we're going into is the last one before the Christmas week, right? So I think that would maybe Saturday of next week, Saturday, likely a Sunday, Saturday, because of our fellow Christians. So it would be on a Saturday next week. And one final note to add: the website is on, and I'm gonna put it on my social media handles, like the bio on TW Inc. and all of that. So to access the Discord, you need your email address here to proceed to checkout. And these are the you know these are the products for the Discord 2026. I already have I have folks on the wait list. I think already I think there are about 8, so I have like 2 more people left if you're interested to join the wait list. And I'm gonna put this website. This is not live yet. Okay, it's not live. I'm gonna talk to my friend that helped me do it. I should take it live, and just had a few things here. So it's a very simple page just to collect payment, obviously. And if you're still interested in joining Discord, I would have the link, in the description, and for the wait list. Anyways, I'm going to drop the link there. I'll drop it on my social media pages and stuff like that, and we can begin prepping for next year. Your payment should come in quickly because I know a lot of folks are gonna have to spend their money on Christmas. So if you're interested in it, you can drop your payment and you wait till January. Although you're gonna get added to Discord anyways. So yeah. So let's get into the commentary. So if you're on this one, you know we talked about the XY last week. I talked about how this gap here, this inversion fair value gap, might prove difficult for dollar index. Now, mind you, I wasn't expecting dollar index to be bearish, but obviously I didn't think it was convincingly bullish last week. I talked about some sell side liquidity on the hourly time frame. That's here, which it was majorly one of the reasons why I couldn't qualify this quickly as a change in the stating delivery, because of we had sell side here, relatively equal lows here, we had a gap here, then there was a change in stating delivery. So obviously, in hindsight, if we talk about the XY, we'd see that market structure on the 4-hour time frame here was for the market, for prices to draw into this premium level, into this breaker, and then markets just roll down very quickly into sell side liquidity. Now this was my thought, because I was thinking DXY should and also likely should trade into sell side liquidity here, but there's a conflict of high time from oil flow and levels like markets could draw into, and now we can see how the markets played out. Okay, the market stayed in consolidation, okay, and expanded a little bit, not quite what I'll call an expansion, because if the markets are drawing for sell side, that means all of this rally higher is consolidation in form of retracement. So that's really why I personally did not partake in dollar index last week, because the price action wasn't convincing. And when you look at Euro USD last week, we were very specific about what we wanted to see on Euro. Okay, I wanted to see the market stay below this daily fair value gap. And someone might be asking, well, there's already a change in stating delivery. Why is it waiting for the market to settle below this fair value gap? I said last week that looking at Euro USD, we could be wrong, because this is a bullish price action, and considering the fact that conditions aren't ideal, and I'm always living in the clause that I could be wrong, especially when markets are trading like this. Now this consolidation is on the high time frames, and it would seem as though bias has changed and all of that, but once consolidation like this happening on the high time frame, I mean, you can expect things like this. And that's why the 4-hour time frame change staying delivery validates your bias, the draw on the liquidity, like you saw on dollar index. Markets traded into this daily imbalance, and all of this was sponsored after the change in stating delivery. Okay, you can see after there was a 4-hour time frame change stating delivery, we had a swing low here. Now look at the kind of things I talk about in price action. You can see we had a swing low here. Now we have a swing low here. You would expect the markets to trade into the previous day's high, right? Because there's a swing low and there's a 4-hour time frame change in stating delivery for bullish dollar index, right? But look at what happened here on Monday. The markets traded below sell side first. If the market trades into sell side first, and this is the draw on liquidity, I mean, from a day trading perspective, or this you're eyeballing this as a draw on liquidity, then the run below this low here would be a total soup. That's a manipulation against the daily time frame draw. But as soon as market met objective here, everything changes, because market intends to. Now I'm talking about this in hindsight, okay? And the market intends to trade bearish for the rest of the week, and you'd see why it means differently now, because right now the run above this high and a breakdown here becomes a shift in market structure. But this also was a shift in market structure, of course, because this was a draw on liquidity, and now market is priced into objective here, and market intends to run into its own high time frame bias, which is trading into sell side liquidity here, and that's what market's about. And that's why if you can define the draw on liquidity, you can actually um, think about price action very well. You can define what is manipulation and what is sponsorship. Now, initially, this run below this low, we talked about it as manipulation, but in the grand scheme of things, all of this was just consolidation and manipulation into a higher time frame key level for markets to continue to trade for sell side. So market structure and all of these things are very, very incredibly subjective, and that's why you have to be careful when you're trying to define your bias. And that's why most times when I can't hard press on one side of the market, it's usually low probability for me, because I know the markets can unfold in a number of ways, right? And I could be wrong, and that's a lot of the reasons why people would ask me, how do you anticipate consolidation? And I'm like, how do I anticipate consolidation? Well, first, I kind of like have an expectations in price. Like I have an expectation in price, and when I have an expectation in price, I want to see the market validate levels with respect to that bias. Now, in this case, I would only see Euro users long-term bearish once we stay below this fair value gap. So long the market is still playing around this gap, I can begin to suspect that I'm either in a consolidating market or I'm likely wrong on bias. Now, a run into this daily fair value gap here, it's actually a good framework for a setup, because markets trade above buy side liquidity here and here. So this is external range liquidity. I mean, if you're looking at this high here to this low and markets trades above, this is external range liquidity, right? So if the markets are trading into internal range, into this all of this consecutive down close candle and this daily fair value gap here, at least you want them to rebalance inefficiencies in this daily range, and this range from this low here, we have a swing low here and we have high here that overlaps with this key level, this consecutive down close candle. So you'll be eyeballing this fair value gap. So that's why this fair value gap was very, very key. Okay, that's the reason why I wanted to see the market stay below this gap, and markets intentionally stayed above this fair value gap. And that's why when markets aren't validating high time frame conditions, then long-term bias hasn't been established yet. Okay, it will be a 4-hour time frame change stay in delivery, but markets aren't validating long-term bias. And during the week, you already notice how all of these consolidations. You can see all of these consolidations creating mitigated levels, relatively equal highs, low resistance liquidity run, and all of that. And when I woke up on, I think that was Thursday. Yeah, it was Thursday when I woke up and I saw how the markets, there was a change in state in delivery here, and market made a retest. Now this seemed like very good longs for me, but I wasn't watching the market, around this time on Wednesday. I was mostly not trading last week. I only took two trades, no, one trade. Okay, I was managing two trades, but I took only one trade. That was in USD JPY. Okay, and that's how Euro is panned out. I wish I'd seen this earlier. Maybe I would have called it online, but it's actually very cool. So this is the change in the state in delivery. Okay, why does this one make sense? Okay, if you look at the daily time frame, you see we weren't, we're still inside this gap, and we're already in the middle of the week, and this already printed, you know, very bullish and overlapping with the 4-hour time frame. This already hints that okay, all of this movement here was just some consolidation, and that's why I was never comfortable with taking any shot here on a long-term basis. Okay, on a short-term basis, it made sense, but you know, I'm only comfortable trading the 4-hour time frame if I'm going to get on in like a short-term trade, very good price range, because I can't be risking this amount in peak range, and I'm not getting at least three times in reward, right? So so that was for last week, and looking at dollar index this week, still bearish, because now we have last week that closed heavily bearish. We have a volume imbalance here. You can see the markets opened high here and closed here and opened higher here. So we have a gap between these candles closing and these candles open. So that's the volume imbalance. So all of this movement here, I think the markets are interested in trading inside the volume imbalance. So on the daily time frame, we have this level here. Let me take this one out because it's served its purpose. So all right, so this is the volume balance here we're eyeballing from on the weekly time frame, and on Friday we had an indecisive candle. Well, I'd like to see if Monday can reach out for Friday's high. It's not really a certainty that Monday will get into Friday's high, but looking at this volume imbalance here, I want to see if the market has any interest in trading into this level here. And if there's any interest here and market trades here, and I see market structure confirmed, then I'd like to take short on dollar index here into this level here. That's the only thing I want to qualify in the XY, not because I am bearish on the XY long term. I'm still bullish on the XY long term, and I believe this market is in consolidation, and all of this is for the markets to return back into a discount, because we had a market structure shift after prices traded at both this high. And so this looks like the obvious draw on liquidity here on the weekly time frame, seeing this clearly. So I think that the markets may be willing to trade into sell side liquidity here and into this volume imbalance. So that's what I think about DXY on the daily time frame. So let me have this on the weekly chart. Sorry, on the 4-hour time frame. Oh god, I don't know, just feeling some type of way. Alright, so this is the daily volume balance. See what happens if the market trades here, and see if we can completely rebalance this inefficiency. Now we have mitigated levels here, the resistance liquidity run. It's not really my concern. My concern is to see if the markets can price in into this short-term premium and take us into sell-side liquidity here. So on Euro USD, well, if I'm to transpose whatever I just said on dollar index, I think this is a near-term draw on liquidity on Euro. Oh, very close. I think there might be some interest here, but I'll just have this one here first, because on DXY I said markets are likely to return into a premium on DXY. So I think this fair value gap is still key on Euro USD. I can discount this gap. So markets may return into this gap, probably take out Friday's low, possibly take out Friday's low, and if we see a shift in market structure, we can aim for this level here. And that's simply what I have on DXY, and this again is the final commentary for the year. Happy holidays, folks. So until I talk to you on the live stream, be safe.